Moving on with the second part of our mini educational project here on fair binary options, first wave extension impulsive move, how to trade it, and more importantly, what to do when this kind of a pattern is identified. And we said two things, actually three things on the first part. First of all, we should look at the first wave to be the longest one and to be more than 161.8 when compared with the third wave. Then we should look for the time taken for the second wave to be the longest, or the second wave to be most time consuming out of all the patterns there. And of course we should look if the fourth wave and the second wave should overlap or not. Now we do have such a structure, and this structure in the chart above is going from this moment of time up to, of course, this moment of time, and this is being called a first wave extension, as it goes with wave 1, or the first wave, being the longest one. Then of course the second wave to the downside being all the way in here or here probably, but I would say something like this, the second wave. Then the third wave is go all the way to the upside here. Then the fourth wave should be all the way to the downside here. And the fifth wave, of course, let's say stabbing the 1, 2, 3 trend line. Now the thing is with this patterns, with this first wave extension, the thing is that the market is rarely, let's say, respecting the corrective waves or the impulsive moves for the motive waves or the moves that are advancing without having the overlapping there. So all we need to do is to look if the market overlaps, meaning exactly what we said here. If the market, the fourth wave, cuts into the territory of the previous first wave, and as you can see the fourth wave comes into the territory of this first wave, that means it is overlapping. Well, if it is overlapping, this is being called terminal impulsive move, and it means that all the waves 1, 2, 3, 4, 5 are corrective. So you are not labeling this move to the upside, or this one, or this one, or this one, or this one. You are not labeling them with numbers, but you are labeling them with letters, as all of them are corrective. So what to look for? You're looking for zigzags, you're looking for zigzag family patterns, meaning double zigzag or triple zigzag or stuff like that. You're looking also for flats, you're looking for a complex corrections like double combination or triple combination, and all of them being corrective waves. So the next thing to look for is the time element. We said that the time, most time consuming, should be the second wave. Well, this is the second wave. It is the most time consuming. So all rules respected here, nothing to add. However, how to actually trade binary options on it? Well, first of all, let's say that we suspect here and here, we suspect that the move is a terminal impulsive move, as we have the overlapping. So what to do? Well, we take a Fibonacci retracement. We measure the length of the first wave all the time, and then we take 61.8 out of it, and it means that this is basically the 61.8, and it means that the third wave should fit into this outcome. So the third wave, we project this one at the end of the second wave, and the third wave should fit. So by the time market advances and advances and advances and this reaches the higher levels of this 61.8, we should go and buy put options, and based on the time frame that is identified, we should see what kind of an expiration date we can use, because if this is a 4-hour chart, then we can go and even use end of week expiration date or end of day expiration date. But if it is a let's say a 1-hour chart or maybe even lower time frames, then we can use lower expiration dates as well. Why not? On the fourth wave, when the fourth wave comes and we see the overlapping, then what to do? Well, we should measure the length of the third wave here and project it to the upside. Let me change the color for it. and project it to the upside by the moment that the fourth wave ends, and that would be the maximum distance for the fifth wave to go. So we can go and buy put options by the time or if that level comes. However, like mentioned on the written part of this project, terminal impulsive moves or first wave extensions, it doesn't matter, they have the shape of a wedge. Now, having the shape of a wedge means that the 1 to 3 trend line, this is the wedge. Let's make it a bit bigger. Let's make it like this. Let's make it red. The 1 to 3 trend line here and the 2 to 4 trend line should be signals when they are pierced to go long or to go short, to buy call or to buy put options. In our case, we want to buy put options, of course. So we look for the 1 to 3 trend line to be pierced for the fifth wave, while price is not going more to the upside. And this would be from here to here. This would be an area to buy put options. Expiration date as big as possible. Then the 2 to 4 trend line is broken. Then the 2 to 4 trend line is retested. What to do then? Well, of course, buying put options on a retest. And every time the market is testing that area, we should only go and buy put options. Well, this is how you should trade a terminal impulsive move. This is how you should trade a first wave extension. And in this case, we are trading them with put options or to the downside if you want, because the trend is bullish. But exactly the same is valid on the downside. With a falling wedge, the trend should be bearish, and then we should look for the wedge to break the other way around, hence call options. Thank you for being here. Make sure you check more projects that we have on Binary Options Academy, and please look at them and you will find a lot of useful information. Thank you and bye bye.